Hello friend, welcome to Marine Engineering Hub. This is your narrator, Chief Engineer Ravi Gupta. So today we're going to talk about principle of marine insurance. This is a part 2 in which we'll talk about indemnity, and in today's video we'll see what is indemnity, what is the example of indemnity, then we'll see the types of indemnity, that is contribution and subrogation. In contribution we'll see what is contribution, example of contribution, and after that what are the eligibility of contribution, and after that we see what is subrogation and what are the types of subrogation. So I guarantee after watching the video you will have a clear concept about the principle of marine insurance. So please tune till last. I guarantee you will gain a lot. So friend, Marine Engineering Hub is a platform which make video like this, from which all of us who are watching right now will get benefited. So please encourage us by subscription. Okay, so please subscribe. It is more valuable to us. So please subscribe. Friend, Marine Engineering Hub have started membership, and if you want to enjoy special perks and want to interact with me directly, you can join the membership and you can have an interaction in which you will learn a lot and you can have a clear doubt session. So friend, so let's start the today video of principle of marine insurance part 2. What is indemnity? So indemnity in marine insurance means putting the person in same financial position as he was before the loss. So it is saying that if a person suffer a loss, in that case he would be put in a same financial position as he was before the loss. So suppose this is your ship. Your ship is carrying some container. Okay, your ship is carrying some container and it's moving from point A to point B. Now suppose some of the container of your ship got lost in mid-sea. So now you have suffered a loss. So in indemnity it say the amount of money, the amount of loss. Suppose the cost of 10 container, you lost 10 container in mid-sea. The cost of 10 container is $1 lakh. So the amount of loss you have suffered, that amount of loss in financial term will be given to you. So in indemnity it say that one should not make profit out of loss. It means what? It means that suppose, as I have told you, that you have suffered suppose 10 container while your ship was en route from point A to point B. Now as you suffered loss from point A to point B, now what will happen? The cost of 10 container was around $1 lakh. Now you told to company, no, the cost was $2 lakh. So you give me compensation of 2 lakh. So it means you are making profit out of loss. That should not be the case, and for that reason the indemnity comes. Indemnity means security, protection and compensation against the damage, loss or injury. So indemnity, what is the meaning of indemnity? If they ask you examination, it means that it means security, protection, compensation against damage, loss or injury. So the main purpose of whole concept of indemnity is that you will be compensated that amount of money for which you have suffered a loss. Now you will not be compensated with the exact same thing. Now suppose you have lost 10 container and what are the material inside that is gone. So you will not be given 10 container back with same material. You will be given the money, the amount of money, the 10 container and the material cost, that will be given to you. Okay, so that will be given. It means that you will be placed in same financial position before the loss. And indemnity principles say that you should not make any profit out of loss. Means if you support 1 lakh, you should not demand 2 lakh. Okay, now according to this principle, an insurance contract is signed only for getting protection against unpredictable financial losses arising due to future uncertainties. Okay, so we are doing marine insurance for what? We are doing the marine insurance so that we can get compensation for unpredictable financial losses arising due to the future uncertainty. As per principle of marine insurance, policyholder would be compensated only to the extent of loss. It means that you will be compensated only to the extent of loss. Okay, and the person should not purchase marine insurance to earn profit. It is always saying the same thing. You will be compensated for the amount of money and you will not able to earn the profit from the marine insurance. Okay, now let's take an example. So suppose you are a cargo owner and you suffered a perishable cargo loss of worth 10 lakh. So you are carrying a cargo in a container. Suppose you are carrying a cargo in a container, and now the cargo in the container was a perishable cargo. So the cost of this perishable cargo was around 10 lakh rupees. So, and you have an insurance of 20 lakh rupees. So how much loss you have suffered? You have suffered a loss of 10 lakh, and how much insurance you have taken? Of 20 lakh. So now you will be eligible for the compensation for the loss. So the amount which will be given by the insurer will be how much? Will not be the 20 lakh. It will be the amount of loss which you have suffered, that is the 10 lakh. So it means the amount given by the insurer is 10 lakh to compensate the loss you have suffered. Cargo owner will not get as compensation, he will get as a financial support as a compensation. So it means that, what this means to say, that suppose you are carrying a cargo which is perishable in nature and it cost you have suffered damage of 10 lakh. You have done an insurance of 20 lakh. As you have done an insurance of 20 lakh, therefore you are well covered under your loss. So now you are going for a claim, and the amount of compensation will be made to you will be 10 lakh depending upon the financial loss which you have suffered. You will not be compensated 20 lakh. If you have taken a policy of 20 lakh and if you have suffered 25 lakh, in that case you will be compensated up to the policy amount, that is a 20 lakh. So I think this is clear. Now let's see what do you mean by what are type of indemnity. So the type of indemnity, as I have told you in the here also earlier, that there are two types. One is the subrogation and second is the contribution. So let's see what do I mean by contribution. So the contribution is work on a principle of indemnity. It means that it work on a principle of indemnity. What is the principle of indemnity? If anybody asks you, the principle is that putting the person in the same financial position as he was before the loss, and he should not make any profit of loss. These three are the principle of indemnity. Okay, so now according to the principle, the insurance can claim the compensation only to the extent of actual loss. So as you are saying here, everything there, everywhere, wherever the word indemnity is used, you will be compensated for the amount of actual loss. Okay, so in contribution also your compensation will be made up to the extent of actual loss, either from the all insurer or from the one insurer. So you should understand what is a contribution. Now suppose you have taken insurance from two company A, okay, and company B, okay, of 5 lakh and 5 lakh, okay, and now you suffer a loss of 10 lakh. Now you suffer a loss of 10 lakh, okay, and you have taken an insurance from each company of suppose 10 lakh, okay. So now the compensation which will be made can be in such a way, like suppose only A will give you whole compensation of 10 lakh and he will claim half from the B, or only B will give you of 10 lakh compensation and he will claim 5 lakh from A, or both can contribute 5 lakh for your loss. So when both are contributing for your loss for which you have taken the insurance, that will be called contribution. So contribution means what? It means that you have taken same insurance from the two different company and you have suffered a loss which is common to both insurance. For that reason you will be eligible for a loss. You will be eligible for a contribution loss. So if one insurer pay full compensation, then the insurer can claim proportionate claim from the other insurer. So let's take example, you will get a clear concept. Suppose your shipping company insured the ship worth 50 lakh USD with a two insurer. Suppose Tata Private Limited for 9 lakh USD and New India Private Limited for 6 lakh USD. And your ship worth is how much? 15 lakh. So the worth of SIP is 15 lakh. You have taken insurance from Tata and from the New India. From Tata you have taken 9 lakh, from New India you have taken 6 lakh. Now suppose the SIP has a fire and is destroyed to some extent. The total cost of repair is 6 lakh. So now you understand. So SIP worth is 15 lakh. You have taken two insurance, from one from Tata, one from New India, and your SIP has suffered a loss due to fire and the cost was 6 lakh USD. So now how much the compensation will be made? The compensation will be made depending upon the proportionate. It will be made on the amount of premium paid by you in a proportionate form. Now it means that you have taken more insurance for the same peril, 9 lakh from the Tata and 6 lakh from the New India. So as you have taken more from the Tata Private Limited, you will be more compensated from the Tata compared to the New India. So it means that your company can claim full loss from either Tata or New India, right? But what will happen if both company are coming together for payment? In that case, the Tata will pay 3.6 for the out of 6 and 2.4 will be paid by the New India. It means that you can see, as 9 lakh was covered by the Tata, so they are paying 3.6 out of 6 and remaining 2.4 are paid by New India, because they are taking the contribution amount of 6 lakh. So depending upon the amount of coverage you have taken, the proportionate distribution will be made between the company, but the amount which will be given will be to the extent for which you have suffered the loss. So it work on a principle of indemnity. So now for a contribution there are certain conditions you should be eligible. First, you should have at least 2 policy, and all policy must be on principle of indemnity. After that, the policy must cover same interest, same subject matter and same peril. Then only you are eligible for contribution. This is very important, that if they ask you in the examination that when you will be eligible for the contribution, it means that you should have at least 2 policy. You should have at least same interest, you should have at least same subject matter, and you should have at least same peril. In that case only you will be eligible for a contribution. The policy must be also enforced in all time. It means that both policies should be enforced, not that any one of the policy is expired. In that case you will be eligible for only one policy, not for the other. All policy must cover the same risks and the policy must be legally enforceable. So these are the contribution eligibility. Okay, now what is subrogation? So if they ask you in one word, please say what is the meaning of subrogation. So it means transfer of right. So if they say, okay, in one sentence you explain, so you can say subrogation means the assured cannot recoup his loss from the another party after the insurer have settled the claim. So let me explain you what do I mean by that. So if we will see here, okay, so now meaning is transfer of right, and if they tell you to explain, you will say this thing: assured cannot recoup his loss from the other party after insurer have settled the claim. So what do I mean by that? Suppose you are a insurance provider. Now suppose this you are a Tata Private Limited and you are a person who are working for the Tata, suppose. Okay, so now you suffered a loss. You have taken an insurance for Tata Private Limited and you have suffered a loss. So you have put a claim. So Tata will provide you the claim. After providing you the claim, the Tata will subrogate the rights from you and he will see that why you have suffered the loss. The person which have caused you a loss, that from that person, from that third party, Tata will go after to recover his own loss. So let me tell you one more time. So what is happening? Suppose you are an insurance provider and you are an insured person. Now suppose this insured person has suffered a bus accident. Okay, now as he suffered a bus accident, he will claim for the insurance and the insurance provider will give him the insurance money. After that, he will go after a third party like bus person or the employer of the bus person. so that he can reduce his own loss. So for that he will take all the necessary document and all the belongings of the insured person so that he can claim on behalf of the insured person for his compensation. So it means that the assured cannot recoup his loss after another party insurer have settled the claim. It refers to the recovery process by which the insurance company of the assured collect money from the party at fault of the insurance in order to recover the fund assured or the insurance company of the assured are already paid. So let me tell you one more example. Now suppose you have a ship called A. Okay. Now you have brought a new ship and your ship was moving, and while before going to point B, okay, while before going to point B, your ship has caught fire in middle. Okay. So now you have brought a ship, your ship has caught fire in middle and it is total loss. It means that your ship has got total loss. So your ship is total fully gone. In fire, your ship is gone to such an extent that you cannot use it anymore. So you will go to the insurance company. You will go to the insurance company. You will say that I have taken the insurance from you. I have taken the insurance from you. You give me the money. So what they will do? They will give you the money what you have, for which insurance premium you have paid. After that, they will take the remaining of the ship, whatever the remaining of the ship they will take, and they will try to sell that remaining so that they can reduce their own loss. So this is how the subrogation work. One more time I will tell you. Suppose you have a ship moving from point A to point B and your ship in the middle got fire completely and got damaged. As you are an insurance person assured, you have taken insurance from the insurance company, you will be eligible for a compensation. So insurance company, you will go to the insurance company and ask for compensation. Insurance company will give you the compensation. He will subrogate the right from you and he will take all the right of a ship so that he will sell all the remaining of the ship to reduce his own loss. So this is how the subrogation works. Okay. So now anybody asks you what are the type of subrogation? So basically there are three type of subrogation: A, B and C. Conventional, equitable and statutory. So there are three type of subrogation: equitable subrogation, contractual subrogation and statutory subrogation. So what will equitable subrogation? Is a legal doctrine which allow the party which has made the payment on behalf of the other party to lay claim to the recovery of damage or the fund from the third party. So in equitable subrogation, there is no letter of subrogation is involved. Okay, so if anybody asks you what is the difference between equitable and contractual, so in equitable subrogation there is no letter of subrogation involved. What will happen that now if you have suffered a loss, after the compensation is made to you, they will issue a receipt on which you will sign that you will say that yes, I have received the claim money and after the damage and they have given me the money. That is called equitable subrogation. Contractual subrogation is that in which before the insurance, the insurer and assured have a defined insurance contract in which they will write that if you suffer like this loss, in that case how much the compensation will be grant to you, in which way, that will be decided before the insurance. Means while you are taking the insurance, they will decide that if this type of scenario occur, then this amount of money and this procedure will be followed. That is called letter of subrogation. Means the quantum of reimbursement, how you will be reimbursed, that is decided in a contractual subrogation. Okay, now statutory subrogation is a subrogation which arise directly by the act of legislature that vests the right of subrogation with a party or a category of a party. Okay, so this is a type of subrogation. If you want me to make more detail of this subrogation, please comment below. So friend, in today's video you will learn what is subrogation, what are type of subrogation, okay, what is contribution eligibility, what are the type of how the contribution works, and example of indemnity and what is the indemnity. Friends, if you have learned something from this video, please do subscribe And if you have watched till now, I know that you are very much interested in studies and you want to excel. So I urge all of you to please join the membership, so that it's very nominal money for all you mariners. So please join and enjoy the perks and pass the examination very fast. Thank you, friend.